Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning, and welcome to the IRS Solution Attorney Show. I am the one and only IRS Solution Attorney,
Darrin T. Mish. And I'm your co-host, Katrina Madewell, hanging out, making the show fun, breaking up that little, sometimes boring topic like IRS issues, kind of fun.
Today's show is going to be fascinating. It's all about a breakdown of how to pay the IRS. Basically.
So, even if you don't have an IRS problem or owe any tax money, you might know somebody that does. So, if you're listening today, you might be able to help them.
I think it's kind of timely. It's April 6, 2017. The filing deadline this year, I believe, is April 18th. So, if you are sort of dreading, figuring out how, if you think you're going to owe the IRS some money and you're not exactly sure how you're going to pay them, we're going to come up with some different options for you to pay them, both physically, like how to get them paid, and some options about how to structure the payments.
And of course, I have this big old smile on my face because my stuff was already filed last month.
Do they take food stamps?
No, likely not, Pat.
Well, he said different ways to pay them.
And I don't want to brag, but I've been late. I've been late the last couple years. So to have it done so early, like I literally had to send my bookkeeper and my accountant a thank you note because I was just so pleased.
It's a load off.
I do know the feeling. I
got a refund. I didn't even have to write a check.
I am not early this year. I'm going to be on an extension just because of. Actually, here's the reason.
But
Here's my excuse.
File the paperwork.
I'm going to go with this excuse.
Extension.
The excuse is I am too busy saving the rest of my clients from the big and bad IRS.
The shoemaker's kids has horrible shoes.
I have really nice shoes, actually.
You know what I mean. That's not the point.
So. Let's get right to it. So the different ways to, break down your IRS tax payment options.
And the interesting part about the show and preparing for the show is sometimes you have to do some homework to make sure that you're right on track. And then, and along those lines, sometimes you actually discover new things.
I've been representing clients before the IRS for 18 years. And I thought I knew all the different ways to pay the IRS. And in doing research for the show, I actually learned of two kind of bizarre ways to pay them, but there are two special ways. And no, it does not include food stamps, Pat George.
Well, then I don't know how I'm going to pay him this year.
It is so tempting to tease him about his paycheck, but I won't because it'll just wound him too severely.
He makes the show fun, Darrin.
He does.
Do not injure Pat.
I actually don't want him to go away.
No, you know what?
I would go kicking and screaming like I would be in Charlie's office if anything happened to Pat.
I kind of changed things, or the great people at Beasley changed things for me this week, so you probably won't hear me complaining so much.
Oh, very nice, and congratulations.
I no
to
longer
Pat
work
George.
for the evil empire. I now work for Beasley.
Very nice.
It's kind of weird how radio works. Like Pat's contract was with somebody else, but you're in this building.
And I'm here with the family of Beasley, and it's nice to be
I have to say, I started radio on a completely different network.
Right.
Darrin was with me, and he's been in that building, totally different building than Beasley. And there's a couple other, like I would say 4 major broadcasts, like Beasley's one of them.
I've been in a couple of those. I've been in a couple of those networks with you. Once as a guest, once as a host.
But 4 big ones.
Yeah, and one of those was but
not
even
a one, deal. Like there's one that's a powerhouse, and I have to say that I love Beasley. I love this station and the people here so much better than I ever did at the other one.
Yeah, for sure. A lot of quality people in this building. Everybody's really cool and nice. And on occasion, as I'm leaving the show, at 10 o'clock or 10:15 or whatever, an employee will come and say, "Hey, I'm a fan of your show," and I'm like, "Wow, at least we have one." So. And
we really do try to bring you guys a great show. We try to bring a lot of quality because I think there's a lot of quality shows on Money Talk.
Oh, for sure. Yeah, 1010 has always been one of my favorites, and I'm not just saying that. That's one of the reasons why when we got the opportunity to come over here, I was all about it. It's like, no way, really.
So for you listening, we love you, and thank you.
Absolutely.
Thanks
for listening, for sure. So let's talk about the different ways to pay the IRS. If you're not able to pay your taxes by, your original filing due date, technically that money, that tax is actually technically due on the filing deadline.
Ask you one more question
Sure.
before you dive into the meat and the potatoes.
Yeah, sure.
What brought the topic of this show? Because Darrin's the one that picks all the outlines and the topics and like what we're going to talk about, and I kind of roll with it.
Well, because we're 12 days from paying.
Yeah, because I'm trying to provide value to our listeners,
right?
On a contemporaneous sort of, vibe.
But I mean, like for me, I get a lot of my content for the show from stuff I see in the field. So I was just curious if it was something.
Well, I'm going to share some stories, especially with if you pay by check. Like how not to have some of the things that have happened to me and my clients.
Okay, let's go.
If you owe taxes to the IRS, you're supposed to pay them by the filing deadline, and people don't really realize that. They think if you file an extension that you got an extension to pay.
We got
like
a few
12
more
days,
right?
Like 12 days, right? So, if you don't full pay by that date, then the balance is subject to interest and penalties and all that kind of deal.
Lots of penalties.
Yeah, and so let's talk about extensions just real quick. That's not the topic of the show, but if we're on April 6th, and if you're not going to get your tax returns done, even if you're a non-filer and haven't filed for many years, you still want to go ahead and file an extension because it's going to save you the late filing penalty, which is right around $500.
But you're saying not filer, haven't filed in many years. Like I would think if I was a non-filer and I hadn't filed for many years, I would think that would kind of provoke the IRS, like poke the bear with the stick.
Oh no, they still know. I mean, the IRS still knows.
Still know, do it anyway.
Oh yeah, they still know that you haven't filed for years. It's not a matter of that at all.
Because you know how they might feel like they fall off the radar.
Well, some people do, but I've never seen the filing of extension trigger like anything negative. It was either going to happen or not.
Okay,
and I don't think the extension really has much to do with that. So if you can, even if you can't file your return on time, if you kind of know in the ballpark of what you owe, then it would be a very good idea to go ahead and pay that in advance so that you don't incur those interest and penalties.
Which most of the time is not the case, which is why they don't file, right?
Yeah, we're not really talking to my typical client right now. We're talking to the rest of the world who, isn't a chronic non-filer for 10 years or whatever. Okay. We're just talking about the regular person who's like...
doesn't have a check for $5,000 to write.
Yeah, they're like, oh, darn, this year I'm going to owe $2,000 and I don't have my tax return done.
I would imagine when people hit that next tax bracket would be when that would happen more often than not, wouldn't you think?
Well, and then there's all kinds of circumstances where special events, for lack of a better term, happen in their lives. Like they sell a house where there's capital gains due, or they have an early withdrawal from from an IRA, or we don't think about this very often, but they hit it big at, in the lotto or at the casino.
At the Hard Rock.
Yeah. That happens. People they've been gambling their whole lives, and this year they actually were, they had a $38,000 jackpot. Never mind, they had $50,000 in losses that they can't document.
Now they owe money.
Yeah, so now they owe money. Because
don't they take the money though automatically from the winnings or no?
Not necessarily. And like you said, what if that $38,000 hypothetical jackpot put you into the next bracket? There's no way for the casino to do that withholding accurately and to know
that's why
your particular situation is. And of course, if you had that jackpot and you were a renter versus a homeowner, you're going to have a different tax sort of ramification. So there's all kinds of special events that can occur to us, either one time in our life or very rarely that could cause, to owe tax, even if you're a W-2 wage earner and you have, appropriate withholdings. I've noticed a trend lately too, that more and more people are coming into the office and they're W-2 wage earners and they have a tax problem. And I'm like, okay, so how'd that happen? And they say, oh, well, because I accidentally put 9 on my W-4 and so there wasn't enough withholding. And I just look at them like, you had to work to create that problem, versus a self-employed person where in order to get the taxes paid, it's not real intuitive. You kind of need a little bit of advice.
You would think they'd be a little bit surprised seeing that the gross amount is really close to the net amount, but I guess they figure, cool. I don't know.
I don't think your average person looks at their stub all that much. They don't
we talked
examine
about
it.
this before too. Remember, we actually opened up the line how many people actually get a pay stub, and it's not that many.
Yeah, they just look at the net. How much showed up in my bank account, and I'm kind of guilty too. Although I do look at my stubs, even though I generate them. So I'd say probably the most convenient way to pay the IRS right now, and believe it or not, the most accurate way would be to pay electronically. It's no longer.
Is that where you log into their site and pay there by bank?
Yeah, the way to do it is you just have to Google the name. It's IRS Direct Pay, and it's actually a pretty good website. And I've paid on there. I've had counseled lots of clients to pay there, and it's pretty fast. And the thing I like about it, among other things, is number one, they don't lose payments, or they haven't. I've never seen one lost. Number two is it's pretty much instantaneously credited. Because if you're talking big money, 50 grand or even more, like a day matters. Because you're accruing penalties and interest, and so with direct pay, it gets credited to the tax balance much faster, and so that's one of the reasons why we really like it.
And it's it's sort of like a wire, like it's going to go right away.
It's like an ACH, ACH, I think, where it's pretty quick, it's pretty accurate. You can print out a receipt, and then especially if you're making estimated tax payments and you pay them using IRS direct pay, you're going to want to go ahead and keep those receipts so that you can provide those to your tax preparer.
Is that the same as the FTPS, or is that different?
It's different, actually.
Okay.
One of the many things I learned doing my research today for the show.
So don't forget, we have some really cool stuff coming up, including some stuff that Darrin found out in doing the research on some different ways you can pay and more. Got some really neat little topics coming up. We are streaming live on Facebook. If you hop on over to Darrin Mish, you can catch us there. And if you got a question, call it 888-404-1010. We're live, 888-404-1010. Back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thank you for sticking with us through the break, and thank you for listening to Money Talk 1010 and the IRS Solution Attorney Show. We're glad you're here.
Absolutely. Perfectly glad that you're here and joining us today as we talk about the different ways to give the big, bad, evil IRS their money.
Yeah.
So that they don't come after you guns blazing.
Whether you owe them a little or a lot, we're going to tell you how to pay them and some new stuff that Darrin discovered. And if you got a question right on time for tax season, you can call us at 888-404-1010, and Darrin will be happy to answer that question, and I'll chime in and make it fun. 888-404-1010.
So before the break, we were talking about IRS direct pay, and the best way to find the link, it's one of those government links. It's irs.gov/ blah, 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 blah. So the best way to find that is just go ahead and Google IRS direct pay, and it's the first result to come right up. It's a pretty good website. And one of the things that I learned in doing the research for the show, and you would have thought I would have thought of this, but I never had, is you can actually schedule your payments on IRS direct pay. So if you're on an installment agreement and you don't want to be on a formal direct debit installment agreement kind of deal, and you don't really want to mail checks because somehow over, decades and decades, the IRS hasn't figured out how to mail statements on time for installment agreements.
The difference is, like, going back to that, the IRS will take the money from your account versus you allowing it to go.
Yeah, if you use direct pay, it's your decision to pay. If you're in a direct debit installment agreement, it's automatic. It's their decision. The other thing about the direct debit that's not necessarily so great is they screw them off a lot, especially on the very beginning. It takes them, an inordinate amount of time to get it started in a lot of cases, 2 or 3 months. And so it's kind of hard when the taxpayer is expecting what we have to tell taxpayers. If you're going to be in a direct debit installment agreement at the very beginning, we have to tell them, okay, wait until the due date. If the money doesn't come out automatically, then we want you to mail a check or use direct pay. I would suggest that you use direct pay because it's much faster.
Well, this is important because if you've been working with a customer that has a huge tax bill, especially, and you've got an installment agreement approved, you want to make sure they don't default on that, right? Because it can undo everything.
I represent a really nice physician here in town, and he owes about $1 million, but he's a very high earner. So like $1 million is not out of reach for him to repay. And he's made the decision, many times over, because I've been working with him for many years because these things keep getting screwed up because the IRS screws them up. He's paying about $15,000 a month, and the IRS keeps defaulting the installment agreement for just ticky-tacky, stupid things.
Like what?
Well, here's what happens is, he pays a lot of tax every year. He pays about, I think his tax bill is around 150 grand a year. And so every year he owes maybe $10,000 at the end. He underpays by like 10 grand, right? Well, he files the return, pays the bill, same day, and that terminates his installment agreement, and we have to start all over. Now, thankfully,
how does that terminate the installment agreement?
Well, because when you have a new payment due, when you have a new balance due while you're in an installment agreement, that automatically terminates and defaults the installment agreement. That
just makes no sense.
Yeah, that's kind of your government at work. So what we're going to do is we're going to counsel him this year to go ahead and make that, prepare the return a little bit early, make the payment ahead of time, make sure that the payment processes, then file the return. That should avoid all this nonsense that we've gone through the last several years. I forget what my point is because you interjected with your question now.
Sorry.
But
I was talking about the difference between paying themselves, like having control, versus letting the IRS debit it from their account.
And the IRS, when it comes to installment agreements, is insisting more and more on these direct debit installment agreements. And over the years, I'd say for the last 7 to 10 years, I've seen the evolution of that program, and it's better now than it whatever has been. In the past, it used to be an absolute joke. You'd set up a direct debit installment agreement, and it would literally never start. So that it was good for some clients. They liked it. So you
would sign up and do it, and they wouldn't take the money.
Yeah, they wouldn't take the money. Now they're doing a lot better.
Somebody's fired,
but it's still not super user friendly. With virtually any other bill you pay online, if you want to change the checking account or the funds source, you can just log on, change it, and it'll just kind of automatically come out of the new place.
Or you're like me, you set it up and forget where you did that, and you got to track it down when you make a change.
Yeah, with the IRS. If you want to change the bank account, for example, which is not a terribly unforeseen circumstance, right? If you want to change the bank account, you have to call the IRS and stand on hold for hours. And then the person may or may not decide it's more trouble than they want to deal with that day and hang up on you. That actually happened to me this week. It happened to me day before yesterday. I was on the phone with the IRS.
Talk about this all the time, how they conveniently hang up on you in the interest of customer service.
Well, no, this was actually an active hang up. I was talking to the lady, and she decided that what I was asking for, which was really quite simple, was just more than she wanted to deal with that day. And so she terminated the call. And so...
Whoops, my finger hit the button.
Yeah, I was a little irritated. And I waited. You have
to start over again when you call back?
I have a secret back door that I pay for to get into the IRS now. So now I'm like, I have the upper hand. I can get on the line with the IRS in 3 minutes.
Sweet.
So she hung up on me, and I was like, okay, so the 17 minutes I wasted talking to her, it was wasted, but I don't have to wait 2 more hours on hold.
It's a nice little revenue stream for the IRS.
So the second lady I got was actually, she was beautiful. She was wonderful, and I got a better solution than I wanted, so it worked out really well. But I did think it was funny that I could actually prove that she terminated the call because she just didn't like, I guess she just didn't like the idea of what I was. It could have been me. It probably was.
Just kidding. So what options do you have if you owe them money and you want to pay them?
Well, so we've talked about direct pay pretty much to death. So let's talk about, you can mail a check. And if you decide to mail a check, what I want you to do is in the memo line of the check, I want you to write the form number. So 1040 and then semicolon your social security number and then semicolon the,
Wait, did you say put your social on the check?
That is actually a government approved, you can't
put the last 4 numbers?
No, you got to put your social security number on the check and you have to put the period in question. So for this year, it would be 12/31/2016 so that they apply it to the 2016 tax year. If you screw up, let's say you didn't owe for any other year but 16 and you inadvertently put 12/31/2013, then what's going to happen is you're going to have this refund for 13 and it's going to have to eventually filter down and get applied to 16. It's going to take much longer. So make sure you put the right period on.
Or they really are confused, aren't they?
And if you have a bill from the IRS that you're writing the check, as a result of that bill, go ahead and, tear that stub off and go ahead and mail that in.
They should be able to get that
right.
That
should work. Now, I can tell you story after story after story in the last 6 months where the IRS has processed the check, cashed the check, and the money disappeared. And it happened to me personally.
Oh boy, that's a fun fight.
My check was only for $200, and so I don't think I've told this story on the air. It was for $200, and I actually wrote the check. When I got the bill, I was kind of irritated, And so I just really quickly, I just kind of scribbled out the check and I was like, here, that kind of a reaction. And I didn't properly designate it in this particular case, but
the stub was there?
The stub was there. So it should have worked out fine. What happened is they cashed the check and I get the next bill and it's not credited for the $200.
Like, oh, it says Mish. We got something for you.
So then I waited until they issued a final notice of intent to levy and I got my appeal rights. Oh. And then I appealed it over $200. So then the appeals guy is like, $200, really? I'm like, well, I paid the money. And he's like, well, it's your problem. You have to find it. And I'm like, no, I beg to differ. This is not my problem. You have to, so we went round and round. So what you have to do is you have to get a copy of the front and the back of the check, because the back of the check has all the numbers and stuff to show where the money went. And what had happened is they had just simply put it on another taxpayer's account.
What? They paid somebody else's tax bill?
They just put it on somebody else's account.
Did you put your social on that check?
It was a EIN, but yeah. So it took weeks and weeks to resolve. And then I had another case recently with a client who's an old friend of mine, and I can't remember the amount of the check, but let's say it was like $40,000. And they took the money, they cashed the check, and they just left it in no man's land. In that case, what they had done was they applied it to an older year, and then they closed out that year without issuing a refund or a credit or anything. And so I think that took about 8 weeks to resolve.
I would think most people would just write another check, because that is such a headache and so many calls and so many hours.
No, you can't write. You can't write another check. They cashed the $40,000 check.
Oh, 40. You said 200 a minute ago. That's what I was thinking.
Yeah, most people over the 200 probably would have, but I was just like, nope, sorry, principle of the matter, and I know I'm going to win. So I went ahead and fought him over that and was successful.
That was probably not a good use of your time, Darrin.
No, but it was actually kind of fun.
Saying.
It was actually kind of fun. And I got to irritate the guy at the IRS. It was wonderful.
Because you're right and you mailed the check.
Well, I mean, I don't think there's probably very many people listening that would think that it's fair that they can just take your money.
No, agreed.
And like,
just think it should be better organized, and it's just not.
And what I think is happening, and this is just a hypothesis, is that there's been IRS cutbacks, and they're cutting back in the payment processing area, which makes like zero sense. If you're running an institution or a business or a company or government agency, would you cut back your source of funds?
Well, you did say they're putting more effort in the collection process.
Yeah, but if you can collect the money and then you can't actually
they cashed the check. They got the money.
True. They've got the check
just
cashing.
Didn't apply it right.
They got the check cashing part down.
Yeah, they know how to endorse it. It just doesn't, Their system from 1970 is a little antiquated.
Yeah, well, that's for sure. So when we come back, we'll talk about the couple of areas that I found out that were new on how to pay your taxes with the IRS. I mean, it was one of them completely blows my mind. I never knew about this.
All right, so you're going to stick around and find out what that is. We'll be back in a minute. If you got a question, 888-404-1010. If you're driving, don't jot the number down. Just come back and we'll give it to you again. 888-404-1010. 888-404 Money Talk 1010. Back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the one and only IRS Solution Attorney, Darrin T. Mish.
I can vouch for him. That's true. And I'm your co-host, Katrina Madewell. Probably not a lot of people with that name.
That's true. That's absolutely true. Today we're talking about the various ways that you can pay the IRS if you owe them. And so far we've gone over, paying by check, which is, in my opinion now, not generally that great of an idea, but it's possible. The other way is IRS Direct Pay, which is basically an electronic payment solution that the IRS runs. The next thing I wanted to bring up real quick, and it's not exactly a way to pay the IRS, but if you know you're going to owe the IRS money, or if you have a bill, you've just got the bill, you just filed, or let's say you file on April 18th and you get the bill on May 15th or something, and you have a bill that's a little bit more than you can afford to pay now, but you think you can afford to pay it over the next 120 days, then you can go ahead and call the IRS, and they will automatically give you a 120-day extension.
Sweet.
So
no charge?
Yeah, no charge. They'll just give you an extra 120 days to pay, and that's usually a pretty good thing to do if you just need that like short-term little extra time to get that paid, and you don't want to enter into an installment agreement. So if you can't afford to pay it off within 4 months and you still want to pay them, as opposed to do an offer and compromise or ignore them or whatever.
What's the secret? You're not telling. what you learned. Are you trying to keep everybody on the hook even longer?
Then you can enter into an installment agreement.
We already lost half the show, and you haven't spilled the beans yet.
Okay, so we've talked about mailing a check. We've talked about IRS direct pay. We kind of talked about the direct debit option from your bank account if you're in an installment agreement. Now, here's something that I guess I had heard of, but I'd never really thought about it, was you can actually have a payroll deduction from your employer, which is kind of bizarre to me. Now, this is not the really big one.
What would the advantage to that be? Other than you don't forget and it happens, I mean.
Well, let's say you had to pay $400 a month, on your installment agreement, but you got paid twice a month. You could pay $200 twice a month instead of $400 once a month. And there are people
who already gone.
Yeah, there are people who would be, who would like that convenience. It just disappears and they don't notice, and it's not as painful.
That makes sense.
If you do that, you have to use Form 2159. So you go to the IRS website and look up Form 2159, and there is a payroll deduction agreement.
I'm thinking who might that be good for? And I think about someone that was self-employed, maybe incurred a huge tax liability. Now they got to pay it, and they're working back in corporate America. That might be a good option for them.
Sure, that could work for sure. Or, like I said, if they get paid, even once a week, and they want to chop it up into smaller payments, and they just don't really have the discipline, don't want to worry about it, you just do the automatic payroll deduction.
Definitely
and that
less
could be a
painful.
nice solution. The income tax was passed in 1913, but withholding from pay for wage earners didn't pass for decades later. And the reason they did it is because prior to automatic withholding from your paycheck, everybody had a tax bill every year, and nobody paid their taxes. And so there was a real big collection problem. So somebody who was pretty smart figured out, hey, if we just take the money before they even see it, then we'll have, more,
the
more
tax
compliance.
Rates probably went up too, I would imagine, right after that.
So I think that happened right around, World War I.
Isn't that interesting how if they take the money, you don't notice or complain as much, and then they actually end up taking a little bit more just because you didn't notice?
Now, there's also a way to pay your tax debts by credit card. Now, this is not one of the super sneaky ones. I'm not there yet. But you can pay your tax debt by credit card. It is not at the IRS direct pay site.
Might be cheaper with some of their fees.
Well, it's not. There's a fee, I think it is about $4.95 plus a percentage. And there's a variety of official payment solution providers that, have charged different rates according to which one you use. They're all kind of the same. It's all like 1.5%-ish. And so if you have to pay by credit card, then you can do that. I would suggest that probably a better option if you're going to pay by credit card is if you had one of those 0%, checks kind of things. That's probably a better way to get that done than to use the credit card itself. But, there are people that's just what they have to do, or they want the points or whatever. So they can pay by credit card. Now, here's the big secret one that I did not know until I was doing the research for the show.
You
can actually pay the IRS with cash at a retail partner. And when I saw that, I was like, okay, so what in the world is a retail partner? Now, I understand the concept. It's some store, it's some chain of stores someplace. And so I looked it up. It's 7-Elevens. You can pay your IRS tax debts at 7-Eleven.
There you go, Pat. Problem solved. Take some cash and go pay it.
And get a big gulp or an icy.
It's, if you're getting your 12-pack for the day, it's like, I got to stop off and pay my taxes. It's kind of odd.
Well, we were talking about this before the show, and I didn't do a spoiler alert, but when my kids were in Girl Scouts, the people that would they stand in front of Publix and all kinds of places, they would love the 7-Eleven on a Friday afternoon. They would do better than any other place selling more Girl Scout cookies.
Yeah, because, workers go in there and cash their paychecks, or they've already cashed their paychecks, right? And they're going in there to buy all their stuff. I used to live right by a 7-Eleven. I'd go there pretty often in the mornings, and it was amazing how many tradesmen kind of people would go in there.
It's smart.
Pretty much all day.
And think about how smart this is on 7-Eleven's part to offer services like this, because that's their customer. They're going to get people in there that buy the fountain drinks, they buy the chips at the counter, and all that stuff.
I thought it was amazing, and I absolutely love learning. And so when I'm doing the research for the show, I was like, wow, I just learned that. I can't believe that that's actually an option.
It's good for your people with the money under the mattress that just want to go pay cash.
Yeah, I guess I don't run into that many people with the money under the mattress that want to pay their taxes.
We've seen them. I've seen
Not in my
people
practice,
that
anyway.
try to just go drop cash at title. No, they're not going to take that. They've got to have a paper trail. You got to put it in the
really
bank somewhere.
So that's the big spoiler for the day, is you can actually pay your IRS tax debt at 7-Eleven using cash. Now, this is also it just makes me scratch my head. So if you're going to pay your tax debt with cash, as opposed to a check or, your checking account, where's the cash coming from?
I guess the IRS is not asking that question. Just hang on to your receipt.
Yeah, and also tracking down a payment seems like it would be an absolute nightmare. Now, I have no experience with this, obviously, because I just found out about it. But it sounds like that could be really pretty much of a nightmare.
You better keep those receipts somewhere you can find it.
So let's finish up the show and talking about installment agreements and, what are the ramifications of an installment agreement. Now, the IRS actually charges a user fee to enter into an installment agreement. I don't think we've ever talked about this. And it's because
there's a fee to do that?
Yeah, I don't typically think about it that often because it's just one of the costs of doing business. And it just
I could probably follow you around for a couple of days and come up with show ideas for a month.
Oh, for sure. Because there's just things that it's like, that's how it works because that's how it's always been. But the user fee is actually for a standard, for an installment agreement or the payroll deduction agreement is $225. Now, it used to be that some IRS employees would try to say, okay, your first payment's going to be whatever the payment is plus $225. Now, they're not doing that anymore. What they do is they just tack the $225 onto the bill, and it gets paid when it gets paid. So
do they take the money first, like off the top, or no? Just curious.
Honestly, I don't know the answer to that.
To see how
I honestly don't know the answer to that. I guess I could figure it out. But
my brain just works like that, I think.
That's if it's a standard installment agreement where you pay by check or with a payroll deduction. If you actually choose the direct debit option, then the user agreement fee goes all the way down to $107. Now, because
they're reaching your bank account, taking it, right?
If you're entering into an installment agreement, which by definition is sort of an expensive way to deal with your IRS problem because the penalties and interest are continuing to accrue and so on and so forth, I don't think you really care too much about what the installment agreement user fee is. I don't think, but it's just sort of interesting that the IRS has decided that, it costs them money to set it up. And so they're going to charge the taxpayer that money. That brings me to a point that I was thinking about today or yesterday was that I just saw a new fee on a transcript the other day. I look at transcripts all day, IRS transcripts for taxpayers all day, every day. And I noticed there was a $20 like IRS collection fee. Just said, that's what it said. Collection costs, I think. And I was like, huh.
Must be to cover the salaries of the new people that they hired.
So it's like the penalties and interest are not sufficient to cover the collection cost. Now we actually have to put $20 extra on there.
It's IRS commission.
It makes you scratch your head. You're just like, okay, well, I guess.
So can I brag for a minute?
Sure, go ahead.
So we have a customer that actually she was a tenant in the property and she's buying it. And this week when Darrin came into the studio, guess what he brought me?
Oh, actually, we should go ahead and make this the IRS train wreck of the week.
Okay, I'll wait. I'll be quiet. Yes, we'll wait. Okay, go. Carry on. That'll be the train wreck.
Yeah, we'll make that the train wreck. And so
is the train?
Oh, no, we just had a premature train wreck. Okay, well, let's just go ahead and do it. We'll close the show out.
Come on, this is the best part of the show.
So this is the IRS train wreck of the week. This is the segment of the show where we talk about, somebody had a problem with the IRS and ultimately we solved it, right? So go ahead, set it up.
So let me set the foundation. So this particular couple rented a property and I don't do really any property management, but this is one of my regular customers I've had for a long time. Originally didn't have enough equity to sell. Now they do because the market's changed. And so the couple that's in there is an older couple. And they're probably, not quite retirement age, but they're older. And so, it was probably quite an ordeal to move in there. And then the homeowner called me and she said, hey, we want to sell the property. So then I talked to them and I remember we pulled their credit when we initially did the pre-screen for the tenant application. And so I had asked Darrin about it and I said, hey, there's tax liens on there and we can do a loan for them, but because their scores are high enough and everything else is in order, they paid their rent on time, but we got to get rid of these tax liens because they're going to be an issue for underwriting. So Darrin dug into this and this was actually like a surprise train wreck.
Yeah, remember we actually had trouble finding these liens, number one, because they were in Orange County, California, Orange County, Florida.
Common last name.
And they had a real common name. And finally, it was like you and I looked together for to us, it's a long time, 10 or 15 minutes, 20 minutes. And we found one, and we found the one we thought that we were going to work on. And I looked at it and I was like, yeah, okay, that's definitely releasable. I don't think they owe that money anymore because of the statute of limitations.
So talk about that real quick.
The statute of limitations is 10 years from the date of the assessment of the tax. One of the cool things about looking at a federal tax lien is it has the date of the assessment of the tax right on it. And then the tax lien is actually, technically released 10 years plus 30 days from the date of the assessment on the tax lien. So these were technically released, but that's not good enough for underwriting.
Right.
We needed to secure actual certificates of release from the IRS.
So this one bill that we had approached almost $6,000.
Yeah, it was around $6,000 or so, and I was like, yeah, I think we can get that released for sure. And so I went ahead and submitted a written release request to the IRS. And
clock ran out.
Yeah, clock.
No money other than Darrin.
Out. And then a couple of weeks after I submitted the fax request, I get a phone call from the IRS, and she says, "Yeah, we got both of those liens released, and they're on their way to you." And so, long story short, there was 2 liens there. One was for over $22,000 that we didn't even know about, but it was also releasable because the statute of limitations had expired on that as well.
Was this in the same county as the other one, or do we know?
Yeah, it was in the same county. And what's really cool, though, is that these folks are actually going to get to close on this house when they wouldn't have been able to because these liens were still like there, just gumming things up. And
I'm going to have to ask them, but I'm going to go on a limb and say they probably have not ever owned a home before.
Oh, fantastic.
So I'll verify that.
So that's really neat. So we've got a couple that's nearing retirement age, and for the first time ever, they're going to be in their own home. They're not going to be renters anymore.
Their housing payment's actually going to go down.
Oh, that's wonderful. That makes me feel good.
Icing on the cake.
And I like being part of the Tampa Home Talk team.
Yes.
We work with Sarah there too, in the mortgage part of the case. And it's just really cool to work with really good people like you guys.
All right, we'll be back in just a second.
I need someone. That's why we have you.
Welcome back to the IRS Solution Attorney Show. I'm the IRS Solution Attorney, Darrin T. Mish. I think that Pat George really picks some really pretty cool bumper music.
He does.
He really does a good job.
You've been giving us lots of help today, I know you helped me because I'm going to have to pay something.
Well, good. You can go on down to 7-Eleven with your cash and pay. There's a 7-Eleven. There's a couple 7-Elevens within a couple miles of here.
So I'm your co-host, Katrina Madewell. We rearranged the show a little bit today, but you can always count on me for that.
Yeah. So let's talk about what you have to do to get any of these options to work for you. I mean, the option of full paying is always there available for you.
Of course, they will take the money in full.
And the option of partial paying is always there available to pay.
Some money is better than
let's
zero.
say you're going to owe $5,000, Pat, and you can't pay the $5,000 all at once, but you have $2,500. You can go on down to 7-Eleven with $25 $100 bills, and you can pay. Although that would be a spectacle. I'd like to video that. But anyway, you can go down to 7-Eleven, pay that, or you can pay it on direct pay or whatever. And so you still owe $2,500. What do you do? Well,
you stand there and make a decision whether you're going to pay or buy lottery tickets.
Be very careful which neighborhood you go to the 7-Eleven with the 25 Benjis because
we looked this up on the map, and I don't know that I would go through some of those.
No. I actually don't go to 7-Eleven or don't go to convenience stores very often because any place where they need to put that, that ruler on the side of the door where they can tell how tall you are.
Oh my gosh.
Any place that has that means I don't need to be in there. My family doesn't need to be in there. It's just not worth going in there.
I always slouch over when I walk by to throw them off.
They want you want them to think you're 5'2", right? Just in case they need to describe you to the proper authorities, that they won't have an accurate description. But anyway, so now let's say, Pat, you owe $2,500 to the IRS. What do you do now? Well, option number one, if you think you can get it paid pretty quickly, would be to call and ask for the 120-day extension because that would be
like same as cash.
It's not really same as cash because there's still penalties and interest. But on $2,500, it's not going to be super significant.
What is it? What percentage would it be?
It's
roughly. Is it 1%?
The interest rate is 3% compounded daily right now, but the penalty rate is going to be 5%. Well, eventually it's going to end up being 5% a month up to a maximum of 25%, I think. I screw this up every time.
So why wouldn't you just make installment agreement right then and just start taking money out?
The penalties also accrue while you're in an installment agreement as well.
There are penalties?
Yeah, there's still penalties for
I don't think
payment.
there should be either, but...
So if there weren't penalties, I guess the thought process is that...
Darrin, you should be the attorney that changes that part of the law.
Oh, yeah. Okay, good. Good luck. But
he didn't like that idea.
Well, anyway, it's like people saying, I don't think income taxes should or are constitutional. And I say,
no,
okay,
that's not
you're entitled to
thing.
You're entitled to that opinion, and that's great. And I'm not going to argue with you about that. And then they say,
how is it the same thing?
And then they say, and I want you to take it all the way to the Supreme Court and get rid of the tax system.
You say, I'm not your guy? Is that what you're saying?
I say, well, how am I going to get paid for that? And they say, oh, well, you'll be famous. Okay. then what? There's lots of broke famous people, but anyway, I'm just like everybody else. I have to pay, I have to raise kids and send them to college and all that kind of thing. So I think if there weren't penalties, then I think compliance would actually go down, because people would say, well, if it's same as cash, if it's 0% interest and same as cash, then why would I pay the IRS? I should pay my other bills first. They already have that problem right now.
Okay.
So I'm not on the IRS's side by any means, but I think that the penalties, if they don't think they should be so high, but if they were eliminated, I think that the compliance would go down.
I just think they should be capped. Like, I think once you enter in that installment agreement, whatever they charge you so far, like, there shouldn't be any more penalties because you've already complied. The interest, sure, that makes sense. They haven't got their money.
Okay.
But I think the penalty should at least stop.
We should write our Congress people.
Okay.
Let's see what happens.
Let me know.
All right.
I'm in.
So then your next, let's say you don't want to do the installment agreement, or you can't pay within 120 days, then you should consider entering into an installment agreement on a $2,500 balance. In our hypothetical, that installment agreement would be really low. You could probably get away with $25 or $50.
Oh, that's okay.
And then you could always pay more if you wanted to. There's no prepayment penalty ever. And so the idea behind getting into an installment agreement early is that while you're in an installment agreement, they're not going to take any adverse collection action against you. They're not going to levy your paycheck, garnish your bank account, or anything like that. They're going to pretty much leave you alone. If you owe under $50,000 and you're in an installment agreement, they're probably not going to file a tax lien as long as you make your payments. One of the things about an installment agreement, though, that we have to remember is that you can't have any missing returns. So that doesn't work out real well. Like, I have people call me all the time and say, well, I owe, $5,000 for 16, but I haven't filed for the 10 years prior. Can I just get into an installment agreement for 16? No. Why? Well, because you have missing returns. So remember, the IRS, more than collecting the money you owe, is more interested in getting you currently compliant. Right. They're interested in those missing tax returns. If you have to make estimated tax payments to be current, they want you to make some estimated tax payments and so on.
So we have a couple good questions, and I think one of these news stories we really should get to.
Okay, go ahead.
Can I hop around?
Yeah, sure.
Okay. So let's ask one of the questions that Lisa had. She said, is the income I earn from tips taxable since I earn below minimum wage? That's kind of a good question.
Answer equals yes.
I know, but it's a good question.
Yeah.
I thought.
Tips are taxable. Do all tips get taxed? I doubt that. Seriously. Yeah, I don't think so. And I think there's a difference between the amount of tips received and the amount of tips reported as received as well.
Would not doubt that at all. All right, so let's jump into this one because I find this pretty fascinating. But Americans paid $3 billion in Obamacare penalties.
Yeah, I'm starting to see them in my practice too. I think they started in 2014 and then they went up in 2015. They call them shared responsibility.
But what
payments.
are they doing? That's $3 billion with a B dollars.
Yeah. Well, that's $3 billion is like,
that's a lot of money.
That's like a bad government.
Yeah, but what are they doing with it? They didn't have it there before. Where's it going?
I don't know what they do with the money. I think it probably just goes into the Treasury and goes to pay the bills of the federal government. There's some interesting things about that, or those penalties, is that they're not leviable, which means they can't. If that's all you owe the IRS, they can't levy your paycheck, and they can't just grab it out of your bank account like with any other tax debt, because it's like this special category.
So how do they get it?
All they can really do is recover it from a future tax refund.
So that's how they get it.
That's how they're going to get it. And then I've got some cases where we've got people that owe, $50,000, $75,000, $100,000, whatever, and they have some of these Obamacare penalties, and we're just lumping them on top for offers in compromise and things like that.
Yeah.
And so it's really not.
And there was one more real quick if you want to touch on it. Senators introduce a bill to protect IRS whistleblowers.
Yeah, I don't think this is going to be real effective. Apparently, the IRS is, talking about legislation to protect tax fraud whistleblowers from retaliation. If we're talking about retaliation from the companies that they're blowing the whistle on, then that'll probably work. If they're talking about retaliation from the IRS, that definitely won't work because
well,
the IRS does not have a great track record in not retaliating at people who
It's been a great show. It's been fun. Sorry I wrecked your train wreck and moved it out, but I was so excited about it. You can get Darrin if you want to reach him at 888-GET-MISH.
That's 888-GET-MISH. That's 888-438-6474. Or you can visit the website at getirshelp.com.
Thanks for joining us this week. We're out.